On the 27th of September, the first ever dedicated Prop Trading Expo took place in London, and the Prop Firm Match team were there as an elite partner to showcase their new product, Prop Firm 1. Throughout the day, I was fortunate enough to be able to interview some of the CEOs of the biggest prop firms in the industry, the likes of Brett Simikoff of Tradeify, George Kohler of Alpha Capital, and James Manto of Quant Tekel. I also got to speak to some of the most popular prop traders, including the likes of Nick Metzger, Zamco, Claudia Trades, and Zaki. The interviews gave me a brand new perspective into the world of prop firm trading, and these are my 5 key takeaways from the experience. Number 1, take your time. The most consistent message I heard from both CEOs and influencers was simple but powerful: slow down. Trading isn't a sprint, it's a marathon. George Kohler of Alpha Capital Group put it bluntly: take your time, don't rush. Sometimes you can be your own worst enemy if you chase a goal too quickly. And Alex from Quant Tekel reinforced that point: take your time and risk extremely small. It sounds obvious, but think about it. Starting a trading journey and being instantly profitable doesn't happen. But trading isn't about comparison, it's about discipline. Alex from Quant Tekel nailed it with this analogy: you can't expect to go to the gym for the first time and expect to be lifting the same weights as someone who's been going to the gym for years. Your job is to focus on your strategy. Journal your trades, backtest your strategy, and pay attention to the markets. Progress comes from daily effort, not about measuring yourself against someone else's highlight reel. Trading demands patience, a long-term mindset, and the willingness to put in years of effort before seeing consistent results. The second key takeaway was risk. The CEO of Tradeify, Brett Simikoff, explained it like this: Tradeify have over 50,000 traders. They have a lot of data. They have seen multiple strategies and many different trading styles. One of the characteristics of non-profitable traders is oversizing. Prop firms provide a lot of leverage. That doesn't mean you have to use it all straight away. This was backed up by Handtech Traders Director of Operations, Bashar Gokal. The difference between profitable and non-profitable traders is night and day. The best traders generally trade between 2 to 3 products, about 50% less than non-profitable traders. This is the trap that a lot of new traders fall into. Influencers often brag about flipping accounts in just a few trades, but here's the truth: they're speaking from years of experience. They know how to manage their losses and they can afford to blow these accounts. Most beginners can't. If you want to pass an evaluation or stay profitable in the long term, slow growth is key. Risking as little as 0.5% per trade can get you across the line in a matter of weeks without risking breaking the rules or blowing your account. Number 3, focus on yourself and not others. This one hit me hard. With social media, it's ridiculously easy to get caught up in what others are doing, watching influencers flash profits and have you wondering why you're not there yet. Progress comes from daily effort, not about measuring yourself against somebody else's highlight reel. As I heard one trader say, feed yourself before looking at another's plate. I also spoke to well-known prop firm trader Zaki, who has achieved over 6 figures in prop firm payouts. He recommended having another source of income so that you're not relying on your trading to make a living, which can negatively impact your psychology. Number 4, don't overtrade. If there's one mistake that ruins accounts more than anything else, it's overtrading. The logic is simple. If you're taking 10 trades a day, chances are they're not quality setups. Handtech Traders Bashar Gokal said it like this: if it's an A+ setup, it doesn't come around all the time. Otherwise, everyone will be traders. Brett Simikoff broke it down using Tradeify's data. The best traders take only 1 to 2 trades a day. That's it. Overtrading leads to an avalanche of problems. It leads to revenge trading, it destroys the edge you've worked so hard to build up, and it drains your energy for little reward. The fix? Step away. Once you've executed your plan, step away from the chance. Clear your head, learn something new, or just enjoy life. I also spoke to Zamco Capital, who said detach yourself from the money. Focus on the process and the strategy. The funding and payouts will come. Discipline ties everything together. It's what keeps you from breaking your rules, forces you to stick to your strategy, and transforms trades from random gambles into structured plays. And it's not just about the charts. Discipline outside the markets, sticking to routines, managing your time, consistency in your daily life bleeds into your trading. It builds the mindset required to stay calm, patient, and strategic even when the market tempts you to break every rule that you've set for yourself. This experience was eye-opening. The advice that I got from CEOs and influencers wasn't sugar-coated, but based off of raw data and years of seeing what separates profitable traders from those who fail. Here's the reality: only a small amount of prop firm traders actually get payouts. That's how tough it is. But hearing from people who live and breathe this industry gave me clarity and renewed focus on my own trading journey. I've taken their advice on board, and I hope that their insights can help you approach your trading journey with a sharper and more grounded mindset too.